Hear from Lou.
So if I'm looking at a straight call or put trade, do you tend to buy at the money or deep in the money? More of a stock replacement strategy? Lou, that is an excellent question. And that really depends on volatility. Am I doing something more of a, so let's talk about stock replacement strategy. If you believe a stock is going up, but it's going to go up in a sleepy, slow kind of way, let's say a slow drift higher. The market's just drifting higher. We're in an uptrend. You're looking at a stock. There's not going to be any kind of volatility. There's not going to be any earnings or any kind of news. You could do something that's in the money, and you're just using that stock replacement strategy basically. And you could still, by the way, Lou, you could still sell calls against those options as well and bring in some income while you wait for that appreciation to happen. And what I would do for that is I would obviously go out more than just 1 month. I would go out maybe 3 months or 6 months or something like that. Because essentially you're buying the stock. That's like what you're trying to replace the stock with. So for an at the money strategy, that you want to take advantage of volatility. That's the main difference. An at the money strategy, you're going to want to take advantage of not just the uptrend of the stock, but expecting some sort of recent acceleration. And that would be the main difference between the two.